Hey everybody, welcome to my Financial Friday live stream. Thank you so much for joining me today. It is a beautiful sunny day here in Northern California on the 2nd of June. So I really appreciate y'all joining me, even though it's a great day to be outside and relaxing and enjoying the weather. Hope everybody had a nice holiday weekend last weekend, and super excited to kick off today's Financial Friday topic. So this is one that I've been getting so many questions about, and I think it's critical that we really dive in, and I'm going to spend a lot of time on this both today and going forward on really helping people understand how to not miss out on Dream for All round number 2. And I will share everything that I know. I'm going to talk about some success stories. I'm going to talk about some frustrations and misinformation that has been out there and is continuing to be out there. And I'm really going to help you to get yourself prepared. Because here's the reality. This program is coming back. And I have talked to so many people in the last 60 days who are frustrated because they missed out, because they thought they knew what it was, or they were trusting somebody, and either they found out too late about it, they got bad information, any number of things that caused people to miss out on the opportunity to take advantage of the Dream for All program. And I think there are arguments to be made, excuse me, for why you should do a loan now instead of waiting for Dream for All. But I'm not going to bring up any of those arguments today. The truth is, my focus today is to say, hey, if you're waiting, then let's make sure that you're making productive use of the time that you're waiting. Let's make sure that you are actually fully prepared so that when the money is launched, you don't miss out this time. Because that's going to be the most disheartening and frustrating thing, is the people who tried on round 1, they missed out on it, and now they've been waiting for round 2 and they miss it again. And I don't want you to be one of those people. So that's really my focus today, is how do I help you make sure that you don't miss out on Dream for All round number 2. So first of all, when will Dream for All come back? That's the question I get all the time. The answer is sometime in the next 13 months. So there is $300 million that have been set aside from the state budget for the 2023-2024 fiscal year. So that starts 1 month from yesterday. That doesn't mean the Dream for All money starts 1 month from yesterday. The year in which the money must be spent starts July 1st of 2023. It ends on June 30th of 2024. Now, last year, the year that we're in right now, that started on July 1st of 2022, that year, there was $500 million set aside. And the state cut that money back to $300 million. That helped about 2,400 families use the Dream for All program in March and April, just a couple of months ago. So now the upcoming year, there was also $500 million set aside that the state cut back already. And so there's a guaranteed $300 million, the same amount that was available in March of 2023, is going to be released sometime between July 1 of 2023 and June 30th of 2024. Within the next 13 months, that same $300 million will be released. Now, the California Association of Realtors is lobbying, and they have a pretty good lobby, to push the state to release the rest of the money. So they're pushing the state to say, hey, we need not just the full $500 million that was originally allocated for this year, but we want you to bump that up to $800 million. And they're trying to get some creative financing to get it to be $1 billion. So it could theoretically be 3 times as much money as what we had in 2023 in 2 months ago. But there is a certainty only that we'll have exactly the same amount of money as what we had. The unknown is, when is it going to be released and how quickly is it going to run out? That's my worry. My worry is, if you're not prepared, if you don't follow the steps that I'm going to talk about over the next 30 minutes, and you aren't ready to pull the trigger, you're going to be in the same position again. And it's going to run out faster this time. So let's think back to how the Dream for All money went. So I'm going to talk about some success stories, and I'm going to talk about some frustrations and misinformation. So the first thing I want to actually talk about with a frustration, I want to talk about some frustrations and misinformation. There were people who lost out on Dream money because their lender waited to lock their loan. And it had to do with a couple of reasons. It had to do with, hey, I'm thinking market rates are going to drop a little bit. And that lender was slow on pulling the trigger and giving you advice to lock the loan. It had to do with, hey, you know what? The lock is only good for a certain amount of time. And so we're going to wait and postpone and lock you a little bit later because you have an extended escrow period. So there's challenges with that. But if we think back to how the money actually ran out, it was a Thursday afternoon, the first Thursday in April, that the state announced, hey, this money is projected to run out by like Monday or Tuesday of next week. Friday morning, they opened up at 8 a.m. That money was gone by 11:30 in the afternoon. It was gone. So in literally, what is that, 3.5 hours, they went through what they thought was going to last them another 2 to 2.5 days, because there were a bunch of people that were waiting. That either, hey, the lender hadn't gotten all the details that they needed. Now, I was locking every single one of mine as quickly as possible. And that's important to have a lender that understands the urgency of getting this done. Now, nobody's going to miss out on that urgency next time. What that means is that we're going to have people that are in contract before the money is released. Some of those people were in contract specifically waiting for the money. I had two, so I actually closed 7 buyers using the Dream for All. I haven't met a single loan officer who's done more than the 7 that I did. And again, that was only a 8 business day timeline that I had 7 buyers locked. I had about 45 that were pre-approved, but 7 of them successfully found a home and got into contract. I had 1 buyer who got into contract the morning the money ran out, and we missed the cutoff. So I would have had 8. That was a frustration because you don't know when the money's going to go away. And once it's gone, it's gone. So we've got to be on the ball. Another issue that happened, or that's going to happen, is I think the money is going to now go in a matter of a few days. And part of it's going to go to people who already were buying, not even planning on using Dream for All. They just got lucky. They got lucky because it happened that during their escrow period, this Dream for All money was released and they jumped on the opportunity. And so you're going to eat up, I think that ate up a good portion of the money that got reserved right away. So this is going to be an exercise in timing. And what you don't want to do is you don't want to start the loan process when they announce that the money is going to be released, because by then it's too late. By then, a lot of my clients, their frustrations were, John, I didn't know that I needed to get approved for a conventional loan. And now the conventional guidelines, I don't qualify. Like I qualify for FHA. Maybe I qualify for Freddie Mac, because their student loan rules are different for Freddie Mac. But CalHFA only works with Fannie Mae. And so it's critical. If you've talked to a lender, you're like, oh yeah, I'm qualified, I'm fine. Maybe they qualified you using Freddie Mac. Freddie Mac has a couple of enhancements that Fannie Mae doesn't, and we cannot use Freddie Mac. So for example, if you are self-employed and you've been self-employed for over 5 years, Freddie Mac says, I only need 1 year of tax returns. Fannie Mae says, well, it depends on what the computer thinks. I might need 1 year. I might need to average 2 years of tax returns. And if your second year back wasn't as good, that could lower your income average and disqualify you. So this is an example of something that will be a frustration if you don't talk to me now. By the way, that's going to be the moral of this whole conversation is if you're thinking about Dream for All money and you're waiting for the money to come back and you have not talked to me and made sure everything lines up, you need to do it now. Because what if there is an issue? What if you don't qualify like you thought and we need to adjust things? So that's why I'm talking through frustrations, misinformation, and success stories and covering some really specific things that you need to pay attention to. And so one of them is you cannot go Freddie Mac. So another benefit to Freddie Mac is Freddie Mac only requires us to count 0.5% of the balance on your student loans as the monthly payments. Fannie Mae is both better and worse. Fannie Mae says, well, if you're making a payment, we'll count whatever your payment is, which means if you're on an income-based repayment plan and your payment is zero, Fannie Mae says, we'll count zero. Freddie says, no, I got to count a half. But Fannie Mae says, if you're not on a payment plan at all, which most people are not on a payment plan because of COVID forbearance, then Fannie Mae says, we have to count double what Freddie Mac requires. We have to count 1% of your student loan balances. I've had some clients who wanted to do Dream for All that couldn't because of their student loans. And so you got to start thinking about, hey, can I get myself onto a payment plan? Because if I'm not on a payment plan, Fannie Mae is going to penalize me. If I am on a payment plan, then I have more flexibility. By the way, gang, this is interactive. So I'll have time at the end for questions, but at any point, if you have questions, please post them into the chat of whatever platform you're watching on. I'll be able to see those and pull them up and show them on the screen as I go through this and answer your questions. And if you're watching recorded, put them into the comments section anyway. I'll go back regularly and pull up those comments and answer your questions in the comments section. So again, frustrations and misinformation. The fact that it's only Fannie Mae, huge source of frustration that you've got to make sure we meet Fannie Mae's guidelines. Here's the second piece. Fannie Mae and Freddie Mac both are tweaking their AI, their computer system that determines who qualifies. Now, this isn't true AI, but it is to some degree. I mean, it's the computer system they've been using for years that uses an algorithm that figures out, hey, you qualify and you don't. Even though both of you might have similar credit scores, similar income amounts, but it might look at something called trended credit data. So trended credit data says, hey, what has the average balance compared to credit limit been over the last 12 months on your credit cards? And do you pay your cards off in full every month, or do you carry a balance? You're a higher risk to the computer if you carry a balance instead of paying it off every single month. And Fannie Mae's system looks at that. Freddie Mac's does not. So I had a client this morning that was doing a Cal HFA, traditional 3% down payment assistance, the My Home program. But Cal HFA requires Fannie Mae. And their credit score was 683. Their debt to income ratio was 42%. They were actually putting 5% down with a 3% assistance. So therefore, they were putting 2% of their own money into the deal, which is even lower risk. And yet Fannie Mae's system said no. Freddie Mac's system said yes. Now with Dream for All, you're putting a much, much bigger down payment. So more of those people will get approved no matter what, because your down payment's bigger. But Fannie Mae and Freddie Mac are tweaking the rules. And so the sooner that we get to run this through the system, the better off you're going to be in knowing that you're eligible. If you're not eligible, you're not waiting for something that isn't there. Or more importantly, we can take steps to get you eligible. We can bulk up your credit. We can tell you, hey, not paying down your credit cards every month is creating an issue. Let's see if we can start paying those down. Or let's get a consolidation loan to pay off those credit cards so that the balances are low and it's showing trended data is improved over the months leading up to actually buying the home. So the sooner we can go over those things, the better off you're going to be. And I also want to be really, really clear. So many lenders don't look to the future and dig for information. So I'm following the Senate Budget Committee that manages this money. I'm following all of the minutes from all of the Cal HFA board meetings. All of these things keeps me in the know so that I can jump on it immediately and get you prepared. Because another piece of this is going to be knowing where you want to buy a home. Knowing who you're using as a realtor and having figured out what your wants and needs are. We'll talk about all that in a little bit. But I want to dive into some success stories. I want to really share with you some of the amazing things that we did for people when I helped those 7 families over the last couple of months to buy using Dream for All. One of my clients was actually one of the last ones that I reserved for Dream for All. This client bought a $250,000 home. He is he works in the casino industry. And so he has a variable income, but he qualified based on using because we can't really prove his tips. He wasn't reporting his tips. And so what we did is we used his base income and we used trust income because his mom has a living trust. And so his mom said, yeah, I'll pay him $1,000 a month out of the living trust. So mom didn't have to co-sign, but mom provided money from the living trust that would pay him $1,000 a month every month for the next 3 years. And I was able to count that as income. So even though I couldn't qualify him using his tips because he didn't claim them, and he talked about claiming them this year, the problem is it would have skyrocketed the taxes that he had to pay. Instead, he can have trust income from mom, kind of the same thing as mom co-signing, except I don't need mom on the loan because you can't have co-signers on Dream for All, at least under the original rules. I will tell you that I'm not positive that the rules are going to stay the same. I'm pretty sure most of the rules are going to stay the same. I think the concern is how much money they're going to provide, and I'll talk more about that in a minute. But here's the deal. We were able to get him in under the 80% area median income. That means that because we structured the amount of the money that mom was paying from his trust to be just enough to qualify him, but not too much to put him over 80% of the area median income. That means he only has to share 15% of his equity instead of 20%, or 15% of his appreciation instead of 20% of the appreciation. So it put him in a better financial position because of my awareness, because of me knowing where the numbers line up and how to get him qualified, helped him to get into the house. And he didn't have to bring in any money at all because we structured it so that his Dream for All money covered both his down payment and his closing costs. And it paid for the mortgage insurance. So he never had a mortgage insurance payment. So it was a huge win for him. One of my other favorite success stories is actually my highest priced Dream for All loan. So I helped a client buy in the Bay Area, and they bought a $1.25 million home. So they got 20% of $1.25 million in down payment assistance, actually maybe $1.3 million home. And so their loan amount was like $1,050,000, and they got, $200 and some odd thousand dollars, $250,000 of Dream for All money. But here's the deal. They bought a $1.2 to $1.3 million home with zero down payment in the San Francisco Bay Area. On top of that, we structured it so that all of their closing costs were included in the loan. On top of that, we refunded 100% of his $30,000 earnest money deposit because I didn't need any of that money to pay for down payment or closing costs. On top of that, I refunded his $650 appraisal fee because I got the Dream for All money to pay for the appraisal fee. And to put the cherry on top, we actually had $17 left over that we applied as a principal payment against his mortgage. So he actually owed $17 less the moment he became the homeowner than what he was supposed to owe because we actually did a principal payment against his mortgage. We fine-tuned the numbers that perfectly, and that's what I can do for you. So being prepared, knowing what you're trying to go after, and making sure that you have all of the right ducks in a row is critical to making sure that you have success. Now, let's dive into a couple of more things I want to cover. First of all, when should I start the process of getting pre-approved? The answer is now. The longer you wait, the bigger the chance is that you're not going to be ready. So we've got, you can go to my website. Anna has my websites right up there. So johnloneking.com, and you can start the application process. At some point going forward, you'll have a QR code across the screen that you'll be able to, there you go. Thank you, Anna. There's my QR code right there. So you can scan that QR code right now, and you can actually go straight to my website as well, download my mobile app. You can upload all of your documents and fill out your application there. But here's why. Because you're going to regret not knowing. You're going to regret not knowing. And the thing is, everybody says, well, John, what am I going to regret not knowing? Well, let's go over some of those things. First of all, will the rules look the same? Well, I don't know. That's the one piece I can't tell you if the rules are going to look the same. My biggest concern is how much money they give to each person. I honestly think my client that got the $1.3 million home and got $260,000 in assistance, that was too much money for one person. Like, we only had $300 million to go around, and we gave one person $260,000. That he could have gotten in the home just fine with a whole lot less money. So I feel like, I honestly think they should make a change. Maybe it's 20% of the purchase price up to a $500,000 home. And then at that point, your cap is $100,000 and you can't get any more than that. My client buying the $1.3 million home would have been fine. Now, he couldn't have bought 1.3. He'd have to buy around 1.15 just because of the loan limits in the Bay Area. But the fact is, he could have found something great at that price range. And so it's critical to understand that the rules can change, but we've got to start somewhere. So the biggest frustration that most people dealt with was housing counseling. Okay. So the housing counseling created major problems for everyone because some lenders told their clients, look, you can't write an offer until you get your housing counseling done. So go get your housing counseling done, come back in May when your appointment's up, and then we'll start writing offers. Guess what? Those people didn't get to reserve the money. The advice I gave to my clients is, look, let's get your counseling done, but we're going to kind of cross our fingers and hope, because I know that if we wait until the counseling is done to write offers, the money's going to run out by then. So make sure that if you haven't done your counseling, go do it now, because it's good for a year. Now, for those of you who did your counseling in the last 60 days, could the money come out, May of next year, and it's too late? You have to redo counseling. It could. So it costs, what did it cost? $100 for housing counseling. My recommendation is, if you haven't done your counseling, get it done now, because the rush is slowing down. The bubble that was created in late March and early April, they had appointments pushing out through July. Now, Calhfa added more counseling agencies. So I have clients right now that are going to get counseling, and they're getting appointments in a week or two. So my recommendation, go get counseling done now. Because the counseling is good for a year, get it done now. Technically, if you do it today, if you closed in, if the money came out in June of next year, you might have to redo it. I think it's $100 of a risk that's worth taking. Clearly, I'm risking your money here, but I really, really do think that it's a risk that is worth taking. So go get your housing counseling done now. If you have questions about housing counseling, I've got on my blog, I don't know that I have a link to it here, but we've got a website. I think it actually, I don't know. Anyway, you can email us. We'll send you all the information about housing counseling. That's probably the easiest thing. Just shoot us an email or comment, and we'll send you the link for the housing counseling and how to get it done. You need to work on housing counseling soon. Okay. Credit. Credit is one of the biggest things that I'm worried about. So I talked a little bit earlier about trended credit data. That is critical. So are credit scores. So you've got not only what does Fannie Mae's computer think, but there's hard and fast credit requirements. And so the original credit requirement said if you're under 80% of the area median income, you can have a 660 credit score. But if you're over that, you have to be at 680. I expect that rule to continue. So if you're thinking about Dream for All, we need to look at your credit now. And the great news is that a soft credit report's all we need. We don't charge you a penny for soft credit. It doesn't impact your credit score at all. I can run it through Fannie Mae's system and see if Fannie Mae likes you. So if you're saying, John, I'm not ready to move forward because I'm afraid of the ding on my credit, I've worked too hard to get my credit to where it is, that I'm afraid it's going to drop my credit score and I can't afford to take that risk. You don't have to. We will do a soft credit pull. I can still run it through Fannie Mae's system, and I can still confirm if you're eligible or if we need to work on it from a credit perspective. So that's critical. Now, the cool thing about the Dream for All and Calhfa loans in general is that your credit score does not impact your interest rate. Now, that's frustrating for the people that have super, super good credit. They're like, man, I should get a better deal. It doesn't matter. If you qualify, you get the same interest rate. The only time you get a better rate is if you're under 80% of the area median income. But guess what? Credit scores impact your mortgage insurance. Now you say, John, Dream for All is giving me 20% for a down payment. I don't need mortgage insurance. Out of my 7 clients, 5 of them used the money to pay for closing costs as well. Only 2 of my clients brought in money for closing costs. One of them only took 10%, maybe 15% of the purchase price, and he put in 10%. That's right. He put 10% of his own money. He took 10% from the state. and he paid for his own closing costs because he didn't want to give the state as much of the appreciation. So for him, his success story was he had 10% for a down payment. He continued to use his own 10%. He got the extra 10% from the state. So now he had a bigger down payment. He had no mortgage insurance, and he's only sharing 10% of the appreciation with the state. So there's lots of ways we can make this work. The other thing, as I was just talking about, though, is if you say, John, I don't want to come up with anything out of pocket, which again, 5 of my 7 that I did came up with nothing out of pocket. For those clients, for you, the mortgage insurance is more expensive the lower your credit score. So you have got to pay attention to your credit. Even if you're at a 680 or 690 or 700 and you're like, John, I qualify. We need to look at ways we can improve your credit. And if there are ways we can make your credit score better while you're waiting, you're throwing money away if you choose the option where you're paying nothing out of pocket and you're letting the Dream for All pay your closing costs, because the mortgage insurance is determined in large part based on your debt to income ratio and your credit score. So credit score absolutely matters. A 680 or 660 credit score does not guarantee loan approval. Fannie Mae has been tweaking their computer. They've been making it harder for people to qualify. It is unfortunately the reality right now that we're seeing them tighten. The banking crisis that happened in March is causing the industry to pull back and to tighten a little bit, and Fannie Mae and Freddie Mac are following along. It's getting harder to qualify for a mortgage, and this is critical that we're getting your credit score optimized. I have a simulator that I go through with you. We set up a Zoom call or an in-person meeting, depending upon where you're at and what works for you, and we literally go through your credit line by line, and then I use my simulator to say, how can we optimize this to give you the best possible score? Because if we have time on our side while we're waiting for Dream for All money to be released, we need to be optimizing our credit score to get us the best possible terms. One of the other things that's a major problem is debts. How much money do you have in monthly payments? Because the debt to income ratio rules are critical. I had people that didn't qualify because of the debt to income ratio being too high. And it was a super big frustration, and they were working on paying down their debt or getting a consolidation loan. By the time they did that, the money was gone. Don't be one of those people. Let me take a look now. Let me analyze your situation and help you know what is it going to take. Now, we don't know where rates are going to be. We don't know where house prices are going to be, but we can at least start with today, and we can make sure we have some wiggle room. And if you're barely qualifying today, I think we should make sure we get some debt paid down. That's where people talk about no cosigners. You're right, there's no cosigners, but that doesn't mean you can't get help from family. You could refinance your car into a family member's name. Somebody who was willing to cosign on your home, they can't because Dream for All doesn't allow it. But take that willingness to help and say, hey, I know you can't help me this way, but John taught me you can help me this way. Can I put my car in your name? And you refinance your car into their name. Guess what? It's no longer your car loan in my mind. Now, whether you write the check to pay the car or they write the check to pay the car is none of my business. But when it comes to your credit, it's no longer your obligation. I no longer have to count the car payment against you. The same thing comes with debt consolidation loans to consolidate credit cards. Credit card debt has ballooned in the last year and a half. We had the pandemic in 2020 and 2021 that came with a significant amount of stimulus money, and people started spending the money. And then the stimulus money went away, and people shifted to spending on credit cards. And if you're one of those people, I understand how it is. But you've got to realize now is the time to take action on that. Now, if you're tight on your debt to income ratio, don't consolidate your credit cards in your own name. See if there's a family member willing to let you do the consolidation in their name. Maybe you've got a situation where you've got a spouse or significant other that isn't going to go on the loan because maybe combined the two incomes are too high for the rules, or maybe their credit score isn't as good and they weren't going to meet the 680 minimum credit score. Move your debt into that person's name. There's a lot of opportunity for us to be strategic, and I don't want it to be too late. We have time on our side, so let's not wait until it's too late. All right. One of the last topics I want to talk about, and then I'll leave a little time for Q&A. And so if you have questions, please post them right now, because this is really the last topic that I want to cover, which is do not wait until you find you find out when the money is coming to start looking at houses and figure out what neighborhood, what size home, what price range. I'm going to talk a little bit more about this. I'm going to go into depth on this, but what I want to start with is simply, it's very emotional to buy a home. You fall in love with a home, and you see that home, you can picture yourself living there. And it's one of the biggest challenges, actually one of the biggest reasons why people stop the home buying process. Like, they're in the process of buying a home, they're pre-approved, they're out shopping, and then I call them a week later and they're like, yeah, we're going to wait for now. We signed a new lease. How come? We just can't take the heartbreak. We fall in love with the home, and then we find out that home isn't available. Somebody else got it. We took a day to think about it, and somebody else jumped in there. Well, guess what? I'm about to ask you to take that risk and multiply it by 10. I'm about to advise you, start looking at homes with a great realtor. A great realtor. If you have a great realtor, congratulations. I'll want to connect with that realtor so that we can strategize and make sure that we're in line with what you're shopping for compared to what I think you're going to qualify for. But here's the deal. If you don't have a great realtor, if you don't have a realtor at all, I can connect you with one of my preferred realtors, and I have preferred realtors all around the state. And in doing so, you need to start looking at homes. Now, you're not going to have the realtor take you out every Saturday and look at homes, because they don't get paid by the hour. So it is not fair, when you know you're not going to buy for a long time, to monopolize somebody's time like that. And that's not what I'm advocating. What I'm telling you is, you're going to sit down with one of my preferred realtors and do a buyer consultation. And that buyer consultation is very much like what you do with me in doing a loan consultation, where I educate you about the loan process. They're going to educate you about the markets you're looking to buy in. You have to figure out what is the must-have versus the nice-to-have. And what things are you willing to concede? What things are you willing to give up in exchange for finding a home? Because if you're waiting for Dream for All, you cannot be picky about the home when the money is available. You will not have the time. You cannot start your search and say, I don't know what city I want to buy, and maybe I'll buy over here. These houses seem nice. Maybe I should look at a condo over there. You cannot do that. You will not have the time. That is one of the other major sources of frustration, is somebody wasn't ready to commit to buying a home. So get ready now. Just understand, the house that you just shopped for, that house is going to be gone by the time that you find a home. Okay. So don't get stuck. Don't get tied to that home. By the way, Tiffany, I appreciate your comment. Guys, if you have questions or comments, please feel free to post them. I'll put your name up in lights so you can see it right down here. So Tiffany, you're very, very welcome. I look forward to giving you more information and hopefully helping you in your journey. But let's get back to the search. We don't know when the money is going to be available. We have no idea. So you cannot fall in love with a home. I need you to fall in love with an idea. I need you to fall in love with a neighborhood, and then decide, hey, what's most important? Is the neighborhood most important? Is the quality of the home most important? I'm not talking about buying a bad home, but I'm saying, hey, you get what you pay for. So is it, hey, I'd love to have a 4-bedroom, but I'm okay with a 3-bedroom. What are the things, and this is neighborhood specific, what are the things that I might need to give up in order to find a home quickly? And only a great realtor can answer that for you. Only a great realtor can answer that for you. So you have to have that conversation now. Then they set you up on a drip campaign. So that drip campaign continues to send you homes in the neighborhoods and price ranges that you're considering, because you need to gather information to get a feel for, hey, what's the market been doing? How quickly are houses selling? What types of houses are coming available? And again, what's most important? What are my must-haves versus nice to have? Because once the money's available, you will not be the only one shopping for homes. So you need to be strategic. I had a client get into escrow 2 weeks before the money was available. Now, we knew we had a risk that, hey, we were taking a big risk by getting them into contract. We did a 5-week escrow, and we did it 2 weeks before the money was available. We wanted to do a 6-week escrow, and the seller wouldn't accept. So we did 5 weeks. That gave me 3 weeks from when the money was available in order to do the appraisal, get everything, get it locked with CalHFA and get it through CalHFA's system. But in the time between when the contract was written and when the money was available for locking, we got the appraisal done. We got the underwriting completed on the loan. We did everything in advance so that we could close as quickly as we could once the money was released, because it got super crazy. The weekend the money was released, for the next week and a half to 2 weeks until the money ran out, we saw a bubble. We saw a bubble across the state of people willing to pay more for a home because they didn't want to miss out on this money. Now, in hindsight, that was a great plan, because I see house prices continuing to go up. As a matter of fact, if you are not subscribed to me on YouTube, on my main John Loan King YouTube channel, which you will see right here. So if you're not on there, get on there. My market update that's being released today. I do a weekly update every single Friday on the market. And I go back over the last 23 years of cycles. And I show you on a graph what's happening with the market and why the media says it's a bad time to buy, because they can't predict the future. And there were 4 different times in the last 23 years that the media says it was a bad time to buy, that it was an amazing time to buy. And I'm going to show you that, because here's the deal. You're likely going to have to pay more for the house at that time if you are in competition with so many other people looking for the same thing. So my advice to my clients is going to be, once we know the money, I expect to find out 2 to 3 weeks before the money is actually released. They're going to tell us very similar to them telling us the last time, that they told us the first Monday in March that it was going to be released on the last Monday. It was 3 weeks out. So 3.5 weeks out that they told us. So here's the deal. We need to start writing offers as soon as we know the money is going to be released, because you're going to be ahead of the bubble. You're going to be ahead of the curve. You'll be in contract, and you're taking a risk, because we don't know exactly where interest rates are going to be. But we learned through the first phase that the interest rate matched what CalHFA's standard interest rate is. I expect it to be the same. I expected that even last time, and I expect it to be the same this time. Now, rates move every single day, but we know roughly where they're at that time. So you have to be willing to be courageous to accomplish your goals. And so for a lot of people, courage means buying now without using Dream for All, because then you can refinance sooner when interest rates drop and you don't have to worry about paying back 20% to the state. For a lot of other people, it doesn't mean that. It means, you know what, I'm going to be courageous when the Dream for All money comes out, and I'm going to make sure that I get an offer accepted. And the earlier you get into contract after the Dream for All money is announced, the less you're going to pay for the home, if history is any indicator of what's going to happen. We're going to see people who won't think about this until the day the money is released, and now they start writing offers because they think, I can't write an offer ahead of time. Sure, you can. You absolutely can. You can do anything with the right advice. And that comes down to having the right lender on your side. And let's be clear, I am interviewing right now to be that lender for you. So if you want that right lender on your side, scan the QR code, go to the website up above. We're going to take great care of you in this process. But also, you've got to have the right realtor on your side. So if you do not have a great realtor that understands these dynamics, then connect with me when we do our loan consultation. I'll connect you to one of my preferred realtors across the state who is going to take great care of you. So gang, this is about it. I'm going to wrap up now. I really, really appreciate all of you guys joining me. If you have questions about anything and you're watching live right now, please feel free to post your questions. If you are watching recorded, please post them into whatever platform you're watching on, and I will get back to those questions later. Please email us, send a telegram, smoke signals, Pony Express, whatever it takes. We're going to take great care of you. We just need to get started now, because the longer you wait to get started, the less time we have to make sure that you're going to qualify and successfully get part of that money that comes out in round 2. So subscribe to both my YouTube channels. I'll be giving regular updates as I find out when more money is coming out. I really appreciate you all joining me today, and I hope everybody enjoys this wonderful sunny weekend, the first weekend in June. We'll talk to y'all soon.